You want to buy a plot and build your own house here in Germany? We'll give you insights into how to finance a plot in the building which you want to construct. Hi, my name is Ajay, and in this channel we're going to guide you on how to buy a house here in Germany. While buying a house, you'll face the decision whether to buy an existing property or get a new construction done. If you're looking to buy a new construction, you'll need to decide whether to get both plot and building as a turnkey project from a builder, German Bauträger, or whether you want to buy the plot and find a construction company which builds your house on top of the plot, as per your requirements. If you're choosing the latter option, you'll need to find a plot and a suitable financing, of course. But how does this work? With an existing property, the land and the house are usually sold in one go. Financing as well as contracting is straightforward. We've already explained this in the channel a couple of times. With a plot and a construction, on the other hand, the situation is not that easy. Let me try and explain. Here you'll basically have two options. First, you buy the plot first and build the property sometime later. Second, you buy the land and the property at the same time, for example, from a developer. Let's take a look at these two options, their advantages and disadvantages. There are situations in which it makes sense to acquire the land first and then, with a certain time lag, to get the new building constructed. Those who do not have enough equity at the beginning to pay for the plot out of their own pocket, or who are planning construction financing without equity, will need a loan for this. Later on, there's also the financing of the house. You can finance a plot of land just like a property with a normal home loan. For example, with a standard annuity loan, with a fixed monthly installment, fixing the interest rates for 5, 10, 15 or 20 years. However, this procedure has a huge drawback. You may be locked in with the financing bank. The point here is the land charge, which is entered into the land register. The first bank entered into the land register is the first ranking creditor for the property loan. So if you are not paying your EMI, the property will fall to the bank. The bank then has the right, for example, to initiate a foreclosure process. If you were to take a second loan with a different bank, the second bank will be in rank number 2. In the case of you not paying the installment anymore, only if the first bank has received its full remaining loan will the second bank get money. So it could happen that the first bank gets the full amount, but the second bank only gets a partial amount, which is still due, because of the foreclosure price did not reach the sum of all open loans. This obviously is a risk for the second bank. Hence, interest rates will be higher for any bank coming in after the first one. The first bank, as a first-ranking secured creditor, has a priority right to be paid out in the event of insolvency. It knows that for this reason the landowner has to pay much higher interest for his second loan with any other bank. If the first bank still offered him a very good interest rate for the first loan, it can now also demand higher interest rates for the second loan. You may be asking yourself, why not just cancel the first loan? The problem is that you cannot easily get out of the annuity loan which you signed up for. You are tied to the fixed interest rate you chose at the beginning, which usually runs for several years, 5, 10, 15, 20. We already spoke about this. And the dependency relationship with the first bank lasts just as long. So you're locked in or need to pay a very high interest rate at a second bank. With a normal annuity loan, you're locking in your first bank for property financing because it is secured on a first-ranking basis, like explained earlier, and can only be terminated after years. You'll need to stick, financially speaking, to the first bank. You could opt for a variable loan to finance your plot though. The variable loan is a building loan without a long fixed interest rate. Instead, the interest rate is adjusted to the current interest rate in a regular interval. Theoretically, your installment can therefore change every month as interest rates rise or fall. Big advantage, you can terminate the variable loan at any time with 4 weeks notice to the end of the month and repay it in full without having to pay the bank any pre-closing penalty. This is not possible with an annuity loan. Let's take an example. Let's assume you need a loan of 120k for the property and take out a variable loan for it. A few months later, you enter into a contract with a construction company and now need 400k for the new building. You take out a second loan, this time an annuity loan. You set the sum of this loan to be at 520k. You settle the variable loan with 120k and still have the 400k to construct. While doing so, the initial bank can be deleted from the land register and the second bank will be first in rank. This way, you'll receive more favorable interest rates and avoid becoming dependent on the first bank. If you purchase both building and the land from a single source, you will benefit from a big advantage. You can cover the cost of the land and the construction with one and the same financing and one and the same purchase agreement. This means that there are no issues with the ranking in the land register, which I just explained, because you only use one bank and one loan. And you'll also need to go to the notary once. The cost of buying a plot depends on two main factors: the area and the size of the plot. Building plots in large cities such as Munich, Frankfurt or Cologne are usually very expensive. The situation is different outside of these big cities and of course in rural areas. Basically, there are the following ancillary costs when buying a house, which are calculated as a percentage of the purchase price. The land transfer tax, which is calculated as a percentage of the purchase price and is set individually by each federal state. At the moment, it ranges from 3.5% to 6.5%. The real estate agents' fees. These also vary, which have anything between 3 and 6% plus VAT. The fees for the notary and the land register entry, as well as the land charge, there you should expect something up to 2% of the purchase price. In addition to these expenses, there may be other additional building costs, for example, surveying, development fees, soil survey, etc. If you buy a land and a property at the same time, all existing ancillary costs are due as a percentage of the total price, like explained. This means that you pay the land transfer tax, the real estate agent's fees, notary, land register fees on the complete purchase price for the land and the building. If you bought the land and the building separately and financed them with two separate loans, you'll have to have them entered in the land register twice. This means paying the notary and the land registry fees twice. The delta, though, is not that high. But it would be nice if you could take your loved one to dinner with the saved costs, right? If the plot was purchased, though, through a real estate agent, you'll also have to pay the real estate agent's fee on that. Typically, the building contract is not supported by a real estate agent, or he's paid by the construction company himself. So you don't need to pay him out of your own pocket. Normally, the land transfer tax is calculated on the total price of the plot and the new building. However, this is not the case if you buy the land first and the building later. In this case, it is only due once, which is for the plot. But it's important that you conclude two separate contracts for the purchase of the land and the construction of the house. The Income Tax Office, the Finanzamt, will check this very carefully. There should be a period of at least 12 months between the purchase of the land and the conclusion of the building contract. It's also important that you do not purchase the land and the new building from the same owner, such as a construction company. If the Income Tax Office can still prove a connection, you will have to pay the entire real estate transfer tax retroactively in case of a doubt.